Hey everybody, it's K.I.S. here. Going to try to give you a little update, but first, I'd like to introduce to you something I call the empty space theory. And the empty space theory is part of the trend analysis where you have higher high, higher low closes that I put in my first video, which does not have as many views as I would like because that's way more important than um, the update videos. That's learning how to do it for yourself. So please check out that first video that I put out on the keep it stupid simple method of trading. Just trading trend, higher highs, higher lows, lower highs. So let's get into this empty space theory. This is a theory that I kind of developed probably 3 or 4 years ago, just doing my normal charting and noticing trend and how trend, closes higher highs, higher lows, and lower highs, and thinking about how can I expect or where do I expect the trend to resume from. So I would measure spaces. So in this context here, you have the all-time high, you have a lower low, lower high, lower low, lower high, lower low. So the empty space that I'm referring to is the space between your lows, and you measure that space, the height difference between the closes. So measure from here to the next low, and then go to the high and project down to find out where supply is going to come in. So if we do this in real time with a trend-based fib extension, I will measure from the close down to the close low over there. So I'm measuring the height from there to there, and I will project it from the closes at the high to anticipate the same distance where supply comes in. So now that empty space there measures the same as this empty space, and that's where you would expect some supply to come in if it's going to overwhelm the demand. So we'll see if that plays out. And the same thing would work with a potential trend reversal. So you do have the downtrend currently from here. This was a downtrend until you closed above. So now if you take that closure from here and measure to our current close high and project from this low, that space should equal this space. This is where I would expect demand to come back in, which just so happens to line up with the previous support. And it would clear out all the liquidity that is down below here. Might be a very, very sharp move down. We will see if we even get a move down. So just preparing for what could be happening, I will measure from the close there to our close high, our current close high. This might continue up and close even higher. And then I will project from the close low right here and see where does supply come in. This says around 60,500, and you can even project from the wicks and say, hey, maybe it comes in there at 58.9, something like that. So that would be a trade setup for me, because I would like the way that looks with a higher high close there from the low. This is where I would look for the higher low and wait for a accumulation to develop here before reversing. Stop loss goes at those wick lows, and we'll see if it plays. See what the market does. Now we'll bring it down to a 4-hour chart and see where additional supply might come in. This would be your supply line. So just taking note of that, locking it in, and then zooming into our current wave. Just looking at basic structures, I can see that this appears to match this. So there would be my ABC there. And now I'm kind of expecting this to be like an ABC, so maybe we get something like that to come into that supply line. That would be really good. And then I would see a potential for a sell setup, which I currently don't have myself, until we start closing some lower lows, lower highs. But you could have a little small distribution range right here. Price will pop back up, hit that supply line, reject back down into the consolidation. Stop loss goes at the high. You can add to it on a breakdown, targeting this liquidity and maybe previous support eventually if it comes down there. I'd like to revisit these wick highs because you got to think somebody, probably the market maker, sold those down, and perhaps he wants to come back down and collect those orders if he does want to resume the trend back up. We'll see. But as of right now, I currently do see this leg right here potentially repeating somewhere here to retest this area, or maybe take this liquidity here and pop up to the supply line. That's potential. Don't know if it's going to play or not. Keep your stops tight. Invalidation is when this leg here would move longer than this leg. So you measure that. The 1-to-1 of that would be your entry. 1618 would be the exit stop loss. So we'll see if that gives a good entry. I'd like to see some kind of basing before entering. So perhaps it comes down. If it comes down like that and has some basing, give you somewhere to put a tight stop loss, and then target that supply line to match that leg. Currently, I'm still just looking for buy setups. I'm not really eager to sell this market unless if I get a consolidation that I recognize, somewhere I can manage my risk, then I'll sell it. But I'm looking for buy setups since we're making higher highs, higher lows, higher highs, higher lows, still higher highs. Get a higher low right around here, that would be great. To a higher high, and then take off whatever I enter here, take off 50%, 25%, pay yourself when you get the opportunity to do so, because those stop losses, they pinch, they get you. But the larger daily setup, this being a higher high, expecting a higher low to come down here, is a much better setup in my opinion, if it comes. If it doesn't come and price wants to continue up, you have to find a way to enter on dips where you can manage risk from. But the real opportunity I see is a potential for that CME gap fill. I'm not a big fan of gaps, but there is no question that they do like to fill at random times. So something to watch out for. Let's look at the CME chart anyway. Yeah, no doubt about it. There is a gap there. Do I need that to fill? No. I've seen it plenty of times where that gap is actually support. If it breaks into the gap, look at 50% of the gap, or it wants to fill all the way to that wick, or come down to previous support. Either way is fine. We just continue up from here. I would want to see consolidation above the all-time high before continuation. Like this would have to close and hold up there for quite a few days, get some consolidation, and then keep pushing. Bringing it into the weekly chart here, I like the strength that we're showing there. That's great. I'd rather it not come down to fill the gap, but I don't get to decide what it likes to do. But you might have support at the gap there, which is just like 61K, something like that. Or just come halfway down this candle here and leave these traders trapped down there. That's also very acceptable. If we do have consolidation into the weekend, maybe Monday or even a weekend break up and really leave the traders that are trapped down there, just leave them trapped and continue pushing up. I'm fine with that as well. Take it one day at a time and we'll see how it goes. Look for your setups and keep your stop losses at your invalidations. Know your invalidations. Stay safe, guys.